This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices climbed more than 1% on Wednesday after Russia said talks with U.S. officials in Moscow failed to reach a compromise on a potential Ukraine peace deal that could have eased sanctions on its oil sector. Brent crude gained 78 cents, or 1.3%, to $63.23 at 10:10 GMT, while U.S. West Texas Intermediate rose 85 cents, or 1.5%, to $59.49. Both contracts fell more than 1% in the previous session. Oil markets and prediction markets do not appear to price a large probability of a near-term peace agreement and removal of the sanctions on Russian oil, Goldman Sachs analysts said in a note.
The European Union agreed on Wednesday to phase out Russian gas imports by late 2027 as part of an effort to end the bloc's decade-long dependency on Russian energy. Representatives for EU governments and the European Parliament reached an agreement in the early hours of Wednesday on proposals set out by the European Commission in June to end shipments from the EU's former top gas supplier following Russia's invasion of Ukraine in 2022. Under the agreement, the European Union will permanently halt the import of Russian gas and move towards a phase-out of Russian oil. Liquefied natural gas imports will be phased out by the end of 2026 and pipeline gas by the end of September 2027.
Moving on to the top news in the energy sector.
OPEC Plus members will undergo an annual assessment of their oil production capacity starting next year for use in 2027, OPEC Plus sources said, to ensure that the group sets output quotas that are more closely aligned with each country's real capacity. This follows an agreement reached on Sunday which marks progress in resolving what has been a thorny issue for OPEC Plus for years, and is expected to boost the credibility of its future production deals with investors and oil market participants. Some members such as the United Arab Emirates have increased their capacity and would like higher production targets, while others such as African members have seen declines.
Benchmark U.S. natural gas prices are ending 2025 in the manner that they began, with a strong rally. And that's bad news for people hoping for further cuts to U.S. coal use. Between January and March of this year, U.S. gas prices jumped by a third due to a cold snap and strong LNG exports, which in turn sparked higher U.S. coal-fired power generation as utilities cut costs by burning cheaper coal instead of gas. A similar pattern seems to be unfolding as 2025 winds down, with coal-fired generation on the rise and gas-fired output getting pared back as gas prices approach three-year highs and strain the budgets of power suppliers. Next, we have the top news in metal markets. Copper prices were sent to a record high on Wednesday by a weaker dollar. Supply concerns and tighter availability of metal in warehouses registered with the London Metal Exchange. Benchmark LME 3-month copper was up 1.7% at $11,333 a metric ton by 11:02 GMT after touching a record high of $11,434.50. Copper is looking quite bullish after breaking to new highs, with algorithmic models flashing buy signals. There's a decent chance prices could climb toward $12,000 a ton from here, said Dan Smith, Managing Director of Commodity Market Analytics.
Iron ore futures settled slightly lower on Wednesday amid weakening demand signals, while traders awaited upcoming economic meetings in China for guidance on potentially supportive growth targets. The most traded January iron ore contract on China's Dalian Commodity Exchange was 0.19% lower at 799 yuan and 50 fen, $113.19, a metric ton. The benchmark January iron ore on the Singapore Exchange rose 0.24% to $104.15 a ton, as of 0724 GMT.
We will now look at the top news in the agricultural sector.
Chicago soybean futures inched higher on Wednesday, supported in part by accelerating U.S. soybean shipments to China after months of tariff-related disruptions, though concerns persist over China's overall purchase pace. The most active soybean contract on the Chicago Board of Trade was up 0.18% at $11.26 minus 3/4 a bushel, as of 03:05 GMT. Traders closely monitored China's buying, with the United States Department of Agriculture reporting no new, flash, sales of U.S. soybeans on Tuesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.